The price for copper and other commodities have hit record highs this year. But will supply issues and demand for AI development be enough to continue that push higher next year? Joining us now to discuss is Craig Hutchison, Director for Equity Research with TD Cowen. And for full disclosure on companies covered by TD Cowen, a division of TD Securities, please see the link to the website at the end of the video. And Craig, thanks for joining us today.
Thanks for having me on the show again.
All right, we just got through third quarter earnings. What's the general outlook for the space right now?
I think it's quite constructive for both copper and gold names. I obviously focus mostly on the copper names. I think Q3 results were generally in line with expectations, but I think the setup going into Q4 is much stronger. We've seen a lift of prices subsequent to Q3, so you're going to benefit from stronger copper prices. As we go into next year, we also think we're going to see stronger copper prices. I'm sure we'll talk about some of the issues around there. We've seen pretty strong supply deficits for the last couple of years. And we see those deficits continuing to 26, 27, which will obviously support the copper price. And also for a lot of our names, most of the production is going to be back-end weighted. So we saw improvement in Q3, and we expect to see an improvement of production into Q4 as well. Some of that's just a function of their mine plans, their grade-driven, et cetera. So I think we're setting up for a stronger Q4, both in terms of higher copper prices, higher gold prices as well, because a lot of these copper producers have byproduct credits coming from gold. And we'll also see a stronger production generally across the board going into Q4.
All right, so let's walk through some of those specific themes. We'll start with copper. It's hit record prices this year. Are we still seeing some supply disruption in that area?
Yeah, so it's been a really interesting year for copper. There's been a lot of disruptions, a lot of volatility. I mean, it's pretty common for mining and copper in general to experience a lot of volatility. But if you think back, start of the year, we had all the threats around tariffs. There was Liberation Day. Everything kind of sold off. But subsequent to that, we've had a lot of supply disruptions. So Kamoa-Kakula, which is a mine that Ivanhoe owns, lost about 200,000 tons of supply in the second half of this year. So a pretty big material drop in terms of so it's the fifth largest producing mine in the world. So pretty big impact to supply there. You've had Grasberg, which is owned by Freeport, a massive supply disruption issue there, related to an issue with their block caving. They had a mudslide that came into the actual block cave. That'll disrupt that mine well into 2026. So that again removed a few 100,000 tons of supply this year and a few 100,000 to next year. El Teniente, which is another mine of Codelco. And then of course Teck, which we might talk about later, since there's MA, they lost some supply disruption as well. So if you add up all those mines, you've had probably about, across the board, about 6% supply disruption. Normally, in a good year, it's sort of 4 to 5%, so it's been abnormally high level of supply disruption, and we're going to see those impacts go into next year. Demand's been okay. It's been sort of a GDP 2 to 3% kind of growth, but supply from the mines itself year over year is trending closer to 0%, and that's created a very tight market for copper, which will support this year and obviously into next year and probably into 27 as well.
All right, let's talk about the M&A front. Obviously the Anglo-American Teck deal has been big news. It's been in the headlines. Can you give us an update on that specific merger and whether you expect more M&A in this space going forward?
Yeah, it's been very topical. So there's a vote set for December 9th where shareholders, there's both an A-class shareholders and B-class shareholders will vote. The A-class shareholders is controlled by the Kevels. They've already given support for the deal. So it comes down to the regular sort of B shareholders will vote on December 9th. I think there was, since the acquisition or merger of equals has been announced, there's been a lot of shareholders who are concerned or, question the zero premium offer that's coming from Anglo. So I think there's some frustrated shareholders out there that may not be supporting the deal. I think most shareholders understand the industrial logic of bringing these two companies together. They're going to have a very strong copper production profile. There are some synergies at one mine in particular, QB and Collahuasi, that will add some value down the road. But I think there is some frustration that shareholders were offered a 0% premium. So it's not a guarantee that the deal goes through. One of the potential interlopers was BHP. BHP is the largest mining company in the world. You might have seen over the weekend, they announced they were trying to come in again for Anglo. They tried last year 3 times unsuccessfully. I guess they've been trying over the last week unsuccessfully again. So that does remove that deal risk of an interloper coming for Anglo. I don't think there's a potential interloper from Teck's perspective, just given some of the Canadian government's issues around, wants and asks for the Canadian people, and some of those is re-domiciling to Canada or moving to headquarters, and I don't think there's a lot of other people who are willing to move their headquarters to Canada like Anglo is. So it'll be interesting. December 9th is the vote. And then for M&A, we haven't seen a huge wave of M&A in the copper space. We've seen more in the gold space. There's just more names, but I think it is an ongoing theme. Certainly all the majors like Rio, BHP, Anglo are all looking to expand their copper production profiles. So they're all looking to target good copper assets out there. So we've seen a little bit. And I think going forward we'll probably continue to see a little bit of that, but I don't think you're going to see a wholesale M&A shift here in the next year or two.
Oh, okay, and we'll be watching that December 9th date as well going forward. Now, we've also seen a lot of interest in nuclear and uranium tied to AI power demand and the transition to renewable energy. What's been playing out in that trend that you see?
Yeah, it's been interesting. For the last, I would say, over a year now, the whole nuclear space, or the uranium companies that we cover, Cameco, NextGen, Denison, UOC, have all been caught up in the AI trade. They're basically a derivative of the AI trade because AI is going to require enormous power demands, and the view is that power is going to come from nuclear long term. So we've seen multiples expand over the last year. Really got kickstarted around the Constellation Energy Microsoft deal, which I think was announced last September. And so there's been subsequently a lot of deals announced between a lot of these hyperscalers, and for the most part, it's been SMRs. But more recently, we start to see some real momentum in the U.S. with Westinghouse and Cameco, and we can obviously talk about that later on in the segment. But yeah, it's for sure there's a really positive tailwind here. AI is putting a lot of power demands onto the grid. The U.S. power demand has actually been growing for the last couple of years. It's been effectively stagnant for 20 years. And so with the rise of EVs and data centers, et cetera, you are seeing a lot of demand. And there's a question of where that power is going to come from, and nuclear is one of the solutions.
What about trade uncertainty with tariffs? How's that impacting things in the sector?
Yeah, I mean, tariffs are obviously a headwind to global GDP growth. We saw those issues back in April and May. There was a lot of uncertainty in terms of what was going to happen. China is still consuming over 50% of the global base metals, copper, iron ore, et cetera. So any kind of impacts on Chinese demand was going to have an impact on the downstream prices and the outlook for the space in general. It seems to have quieted down. There seems to be some momentum here in terms of getting some trade resolution, but certainly as a headwind. We've seen more recently in the last couple of weeks, it seems to be that pressure between U.S. and China's eased a little bit, and we've seen metal prices rally a bit. So it clearly, again, tariffs are a headwind to global demand. Hopefully we see those issues kind of quiet down in 2026 and kind of freeze the space for some actual positive growth driven by GDP.